Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the euro currency again. So in general, fundamental background for euro currency right now stands relatively positive because the statistics from last week was not bad actually. The sentiment index shows that the overall sentiment in the European Union is improving gradually when markets coming back to normal life. The commitment of traders report shows the massive short covering on euro. And as a hedgers, as a speculators, who's closed positions and bets against the upward action. So speculators have closed the shorts, while the hedgers, vice versa, have increased the shorts and closed some longs, anticipating with a possible upward action on euro. So euro currently has just technical barriers, technical limits that prevents immediate upward continuation. We talked about it 2 weeks ago, and talked this week. As you know, you see in reality how the conference resistance on the weekly chart and weekly report condition could hold upward action if even it has significant momentum that we see on euros. That was really very strong. But anyway, weekly resistance has become stronger and it leads to the retracement. Next week, guys, market is coming to the levels that actually are interesting for position taking. And I think that the next week we will focus on and start to consider possible taking the long position on the euro currency. Also, next week we will get a lot of PMI data, as in the European Union and Great Britain. So it will be nice if PMI data will be supportive to sentiment. So if it will be better than expected, the chances for that are not bad. Because in the United States as well, the retail sales last week has shown significant improvement and shows much better results compared to expectation. Philadelphia manufacturing index also was positive. So I suppose that on the jump up from the recession spike of the statistics, probably we could get the better PMI in European Union as well. So, and we start to watch for the levels where we could take the long position. Currently, guys, on the daily chart, we see only one acceptable level. This is confidence. It's 1080, 111.20 area. That will be also pivot support one, screen line, and take a look previous top. So that's actually the same confidence that we talked from last week. This level probably we have to ignore it because, well, due to the few reasons. First of all, we haven't got as double repo as Brent by the buy trade. For the double repo, we do not have close above the 3x3, and no spike action that we discussed previously has not been formed. For the Brent buy, the market has spent too much candles inside below the 3x3 line and shows no reaction on the fib support. That breaks the context for the Brent by the trade. Besides, guys, I suppose that this pullback was so-called Brent by the trade. It doesn't match to Joe Napoli conditions because market here hasn't reached the level, but it was actually the Brent by the trade already. So it has completed. Now is market going lower. It means that we have to focus on the lower standing levels. This level is out from our attention right now. So on the daily we have this level. On the 4-hour time frame chart we have different levels. And it means that overall support of the position taken will be a bit more sophisticated, because if you'll take a look at the extension targets, we have major A, B, C, D pattern here. And this target stands different compares to the level that we have on the daily. These targets doesn't match to the level, to the confidence support. It means that market has chances to turn up earlier than it will reach the confluence. For example, if you will build the levels from these lows to this top, it's additional fib levels on a 4-hour time chart, you will see that we have 1150 that agrees with the OP of this ABCD target, it's 1145, and we have 109.95 that in general agrees with the 1017 level, it's XOP. XOP currently is not very interesting to us because it stands below the daily confluence, but OP with 1145, it's much more interesting because it stands above the confluence. And who currently could say definitely that market will break this level and hit the confluence and will not turn up right from here? We can't know it with the certainty. It means that we have to split our position in two parts and take the first position right here with the stops below the daily confluence. That will be the first entry. Then we need to see what will happen next. If market will drop to the confluence on the daily, we will take another part of the position with the same stop below the confluence. At the first bounce, when the market will hit the confluence and start upward action, we don't know what the action will be, whether this will be just technical response on the confluence or it will be a real reversal to the upside. But with the first pullback, it probably will be significant because there's a strong level. In this case, we'll have to move our stops to the break-even. That's our trading plan. Because if market later will turn down against that drop to the XOP or even lower, at least we will out on the break-even and see what will happen next and make the assessment of the new chance to take long, whether it makes sense to take long position if market will drop too significant to the downside. Well, but our initial trading plan is as follows. So just taking the half position here, placing stop below here. If we will move down, taking this second position here with the same stop, and the pullback moving stops to the break-even. That's the idea. If you're skilled enough, you could do the same thing around this level. For example, how it could be done. You take the position, move stop below the confluence on the daily chart. At the first bounce up, move stops to the break-even. If market reverses up right from here, so your stop will be untouched and you will be in trade. If later market start dropping back down, well, you out at the first level with the break-even and you will be waiting for a second level to enter. But that's only for those who have experience of the trading on the intraday charts. It's a bit sophisticated. You have to be very careful with this. It's not suitable to anybody. But this trading plan is also valuable. So you could follow it as well. So that's approximately how we intend to act in the next week on euro currency and see what will happen. Because currently, guys, we are coming on a good mood in euro currency. We are coming to the levels that potentially interesting for long position taking. So let's see what the action we will get next week.